Friday, October 25th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I'll be looking at the technical picture for gold and silver. It looks like it's improving. I'm going to reference this book here, Technical Analysis Explained by Martin Pring. I've had this for many years. I bought this when I was working in the city. I used technical and fundamental analysis to advise clients. A lot of people, colleagues, were mostly into one thing or another. I always thought it would be good to have a bit of both analysis, technical and fundamentals. I know the markets have become completely disrupted by all the manipulation, but be as it may, I think the markets still function to some extent, and there are some of you out there who enjoy the markets, who do trade the markets. So that's going to be what I'm going to talk about today. I also want to cover something that's happened here in the UK in relation to the LIBOR scandal, the Serious Fraud Office, the Bank of England, and give you my opinion on it, what I think about it, and of course I'll look at the markets at the end. I used to look at the markets in the beginning, but I think this format is pretty popular. Let me know in the comment section below if you agree with that. So let's look at what we've been having, which is a pennant in gold, in my opinion. It could be a flag, but they're quite similar. So let's see what Martin Pring says about that in his book. And flags. He's talking about flags now, and it's not that much different than a pennant. So let's have a look here. This is what he says before he goes on to the definition of a flag. Most of the price patterns described in Chapter 5 can be observed in both reversal and continuation formations. The majority of the formations discussed in this chapter materialize during the course of a price trend and are therefore of the continuation variety. So yeah, flags, pennants, wedges, they're all continuation variety. And what's a continuation? Well, that's when you have a trend up or down, and then you have a formation, right? Or a pattern. It's like a breather of that trend, and then the trend resumes after the pattern is completed. So let's look at the flags. A flag, as the name implies, looks like a flag on the chart. It represents a quiet pause accompanied by a trend of declining volume which interrupts a sharp, almost vertical rise or decline. Well, there you go. We've had an almost vertical rise since the end of May in gold, up and from like below 1300 to 1550, right? That's what we had up until the beginning of September, right? As the flag is completed, prices break out in the same direction that they were moving in prior to its formation. Flags for both an up and a down market are shown on figure 6.1. I won't show you that because I'm going to show you a chart of gold and silver in a minute. Essentially, they take the form of a parallelogram in which the rally peaks and reaction lows can be connected by two parallel lines. The lines move in a counter-cyclical direction. In the case of a rising market, the flag is usually formed with a slight downtrend, but in a falling market, it has a slight upward bias. Flags may also be horizontal. So let's go on to pennants, which I think is what we have right now, or even a wedge. They're all very similar. A pennant develops under exactly the same circumstances as a flag and has similar characteristics. The difference is that this type of consolidation formation is constructed from two converging trend lines shown as in figure 6.2. A wedge is very similar to a triangle in that the two converging lines can be constructed from a series of peaks and troughs, but whereas a triangle consists of one rising and one falling line, or one horizontal, the converging lines in a wedge both move in the same direction. So there you go. And this is what I think we have right now in the longer term chart of gold, especially silver to some extent as well. So let's go and look at the gold chart here. It's a weekly chart. So there you go. As you can see, there's the move from the end of May, almost straight up, right? From a low of around 1265 to a high of 1555. So almost $300 by, let's see, the beginning of September or thereabouts. And now we've had this consolidation. Looks like a falling wedge, right? And the interesting thing is that we could keep consolidating here until the apex of that wedge. But it looks like we're trying to break out of the top of that wedge. So we're very close here. This is, of course, a weekly chart. This is the end of the week. You can see here that we're right on the resistance here at around 1506. And that's where we are this morning. Next week, that line will be below 1500. So it's looking pretty good. Of course, these markets in the short term can be managed by the powers that be. What would the objective be once we break the top of this falling wedge and break this consolidation? Well, it could be the same distance from the low in the end of May, which was 1266 to 1555, which is almost $300, right? So if you add $300 to where we are right now, just above 1505, 1510 or thereabouts, it gives you 1800. So we could see a fairly big move here in gold. Am I certain of it? Of course not, but it is a possibility. That's how I used to, how can I say, when clients talk to me and when they ask me my opinion, I used to use technical analysis as a probability of where things could go. I would recommend trading strategies like options on the upside, all kinds of things, right? But it was still up to the client to decide. I left it up to them. Am I trying to advise you here what to do? No, I'm just giving you my opinion and what I used to do. Hopefully it will help you. So that's the situation in gold. Looks like we're almost about to break out of that falling wedge. And as Prink said, in an upward trend, the consolidation is usually downwards, and we've had that, right? It has been a fairly long one, but don't forget, we went up straight up in gold, basically, for about 13 weeks. So we've been consolidating for about the last 7 to 8 weeks. Look at the silver chart. As you can see here, looks like we're consolidating as well, and we're going to break out here. The silver chart also looks like a consolidation. It's been more volatile, of course, but as you can see, it looks like a little flag as well, the silver chart. And we're breaking out here from the top of that flag. Silver this morning trading above 18, of course. Let's just quickly look at the gold-silver ratio, which I spoke about a few days ago, or maybe a week, that it was looking like it was going to break down. And there you go. We are breaking down here. We've broken this trend line, and that's a positive for the overall precious metals market. So what about the UK situation, the Serious Fraud Office, which is supposed to investigate fraud, right? They've come out with a decision, a ruling that they're not going to follow through with the LIBOR investigation. They're not going to punish anyone, right? I think they've been doing it for a couple of years or more. The Bank of England, as we know, was involved. All the major banks were involved. This was during the '08 crisis. They manipulated the London interbank offered rate, and it looks like the Bank of England pushed them to do that. Why do they do that? Well, it's just like what's going on in the repo market here. That London interbank offered rate was a rate at which international banks lend to each other in London, and they ceased to lend, and that's why rates spiked, just like the repo. And then the Bank of England said, just pretend the rate is low so people won't get spooked by it, right? And that is fraud, of course, right? But serious fraud office, the excuse for the serious fraud office not looking into it is one of their rules that says that if it's not in the public interest to go ahead with this investigation and punish Bank of England, the major banks, they won't go ahead. And why do they think it's not in the public interest? I think it's in the public interest because it exposes the corruption of the system. But it just goes to show the old rule: if you're gonna rob a bank or borrow money, you got to do it big, right? So that's their reasoning of the serious fraud office. Not good at all. They're saying basically, if we go after the Bank of England and the big banks, the whole system could implode. It could hurt a lot of people, even though a lot of people have been hurt for the last 11 years, right? By the almost complete collapse of the Bank of England and its system. If it wasn't for us, the taxpayer, being lumbered with trillions in debt to keep the banks going, they wouldn't be in business. So I think that's a sad day and a sad decision. And I watched Max Kaiser. He was talking about this. I think it was yesterday. He was talking to a guy from renegadeinc.com. He's an English economist, Ross Ashcroft. And he said, yes, the British are tolerant, but they will eventually wake up to this system of rape and pillage, basically, by the bankers and the powers that be, and there will be trouble. So that's what I've got to say about that. Let's just finish off by looking at where the markets are this morning. It's 10 to 8 a.m. London time. So let's have a look here. We've got spot gold up just under $2 at 1505.50. The range has been 1500 spot 7 to 1506.89. Silver doing very well this morning. Gold, by the way, is up just over 0.1%. Silver is up 1.3%. So that's encouraging. It's at 1804, up 23 cents. The high's been 1808, and the low 1777. The Dow is up 27 points, 26,832, the Dow future. S&P is down 1.5 points at 3,007. NASDAQ is down 33 or 0.4%. Amazon reported earnings yesterday, or their results came out. It wasn't great. I think it dropped quite a bit in the aftermarket, Amazon. That's why the NASDAQ 100 future is down. The pound is virtually unchanged, 128.48. The euro is unchanged against the dollar at 111.06. Dollar is unchanged against the yen, 108.65. And the dollar is slightly lower against the Chinese currency at 706.70. WTI crude trading at $56. It's down 0.5%. Brent is 61.20, down half as well. Bond market, the 10-year yield is pretty steady, 176. I think that's where it was yesterday morning when I spoke. The 2-year is at 158. Next week, of course, we've got the FOMC meeting starting the 29th and finishing on the 30th when they decide on rates and the press conference. I saw President Trump tweeted out again that they should cut next week. Doesn't mention anything about the fact that the Fed's been pumping hundreds of billions into the banking system to keep it going, right? No mention of that, of course. So there you go. Technical picture looking better for the precious metals. So for you traders out there, there could be an opportunity there. Serious fraud office in the UK, asleep at the switch, or not really asleep, just very political institution. Lesson from that: if you're gonna do something wrong, make sure you do it big and with people who are really influential. There you go. If you enjoyed this video, make sure you hit the like button. Make sure you share it far and wide as well. Subscribe to the channel if you haven't yet, or think about subscribing. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.